very honored to be joined by Ian Telfer, member of the Canadian Mining Hall of Fame. He'll also be joined by Josh Schmitt, who's president and CEO of Neo Group. But to introduce them both, we have our very own Henry Lazenby, who is, I think, just done an amazing job since joining the Northern Miner last year. Continues to put out industry-leading content for both mining.com and the Northern Miner. Henry's an international journalist with over 10 years of experience heading up North American-focused resource news desk for different multinational media houses. Back in his native South Africa, he was an award-winning community journalist before the B2B media market exposed him to mining. He then came to Toronto, became a Canadian. Well, he's been in Canada ever since. Besides frequent visits to mining and exploration projects, sites, and participating in industry conferences, Henry specializes in covering the North America and international mineral exploration, mining, and metals markets. He's now based in Vancouver. And as I've highlighted, he's doing a great job for us at mining.com and Northern Miner. Henry, welcome to the Global Mining Symposium. It's always great to have you here. And we're really looking forward to this conversation to really put a bow on the day. I will turn it over to you. Hello, Ian. Hi, Josh. Looking forward to the conversation.
Excellent. Thank you very much for the opportunity to moderate another Global Mining Symposium session, Anthony. It gives me great pleasure to introduce two industry heavyweights for our featured session today. Industry veteran Ian Talfer almost needs no introduction, but I'll endeavor to provide a much truncated version of his extensive bio. Ian is a Canadian mining executive and entrepreneur with more than 3 decades of experience in the international resource sector. He has earned a reputation for an ability to build and grow successful and profitable mining companies. Ian graduated from the University of Toronto, where he earned a Bachelor of Arts in Political Science. Ian then went on to study business and earn a Master's in Business Management from the University of Ottawa. Ian formerly served as the chairman of the board at Vancouver-based Goldcorp Inc., which was the leading gold producer, employing over 15,000 staff around the world prior to being acquired by Newmont for $15 billion. Besides leading Goldcorp, Ian has directed other mining companies that have enjoyed substantial growth and have had multi-million-dollar valuations. Ian's leadership helped firms he was involved with reach a collective market capitalization of more than $50 billion during their peak performances. In 2015, Ian's mining career was celebrated with his induction into the Canadian Mining Hall of Fame, among several other life achievement accolades. Welcome, Ian. It also gives me great pleasure to introduce Josh Schmitt, President and CEO of the Neo Group of companies. As I'm sure we are about to learn, the Neo Exchange entails a bold and disruptive capital markets organization comprising Neo Exchange, is a tier 1 stock exchange fueling the innovation economy, and Neo Connect, a multi-asset distribution platform supporting mutual funds and private offerings. Prior to the Neo Group, and also in the role of president and CEO, Josh previously formed the Alpha Group of companies, including the Alpha Stock Exchange. Josh is also intimately involved with not-for-profit organizations that aim to reduce the impact of COVID on Canadian women, among other initiatives. Gentlemen, I bid you welcome and thank you for joining us today.
Our pleasure.
All right.
Good to see you, Henry.
So, I believe the Neo Exchange has been successful in attracting several new mining issuers in recent quarters, which of course is wonderful for the industry. But I thought for us to get started today, let's take a little step back for a moment and just look at how Canada has become the venue in the world for capital formation for mineral explorers, developers, and miners. I want to start by asking Ian, and by drawing on Ian's deep experience in the industry, to walk us through how Canada became the venue for financing the global mining sector.
Well, thanks, Henry. And yeah, Canada has become the place to go for mining finance, and deservedly so. I guess it really started with some of the bigger deposits that were found 100 years ago in Kirkland Lake and in Inco and in parts of British Columbia that showed the world that Canada had the resources and the expertise to develop these deposits and create value for shareholders and employees, etc. And then from then it went on to very much a Vancouver-based junior market that was very successful in the 60s and 70s and 80s and 90s, raising money for junior companies. And it was this willingness to put up money at high risk that really differentiated Canada as a source for funding. And a little bit like Silicon Valley is full of people who realized the money they're investing could be lost, but because of the success stories they've had in the past, or that their friends have had recently, they're willing to put the money up. And so with so many discoveries in Canada and so many discoveries by junior companies and so many junior companies being acquired by the large companies, that's what created this market. And that should continue to create this market going forward.
I want you to also perhaps just, talk a little bit about the refinement of the finance sector and maybe as a result of the BRIEX scandal back in the 90s.
Well, I mean, the regulations have gotten better. The companies have become more responsible. Corporate governance is a much bigger issue now. And so I hope that BRIEX type scandals are behind us. And but the industry responded as it should have to that, and the regulators responded as they should have to that. And now I think our system functions pretty well.
All right. Okay. Thank you for that. Now, with that background covered, how has the finance market for mineral juniors changed in recent years, making it more difficult for these companies to achieve their capital needs? By the same token, we are also seeing lackluster equities markets for the senior miners, especially the gold miners. Despite the gold price trending near historic highs in a hyperinflationary environment, why do you think the senior equities aren't really moving? As a second part to that question, Ian.
Yeah, that's also a great question. Well, I think one of the challenges for the industry is that over long periods of time, gold shares don't outperform the normal stock market. And over the past 20 years, the majority of money being invested in the stock markets around the world is by people who are looking to use that money to retire on. And so they're looking for companies and industries that grow either quickly or steadily, but grow over time. And the challenge for the gold mining industry, because of the fluctuations in the gold price, if you take some of our major gold producers over 20 years, the share price is either slightly positive or slightly negative. And that has discouraged investors around the world, and especially from the large capital pools in the United States, from investing in the gold industry. On the junior side, the thing you need, as Silicon Valley continues to show us, the thing you need is success stories. Nothing makes people invest more quickly than if their brother-in-law or their next door neighbor just made a killing in a gold stock. And one of the challenges we've had over the past decade or so is the number of exploration success stories that have led to a rocketing share price have been very, very few. And so people are more and more nervous about risking the money because they haven't heard a success story in a while. So the combination of long-term mediocre returns for the majors and lack of success stories for the juniors, I think, are putting us in the market we're in right now.
Right, that makes sense. So how does this trend of harder to secure investor interest balance out against the critical need to discover new economical deposits and their development to production, against the perceived structural issues with capital formation in mining? Ian, I'll throw that back to over to you as well, and then we'll get to Josh.
Well, as I say, it's a chicken and egg. A success story will lead to capital, and capital will lead to a success story. And I think it's going to have to be a discovery success that kicks everything off. So, we're optimistic that many of the companies you're presenting here today are going to have success, and that will get people more interested in the junior exploration market.
Right. Okay. So over to you, Josh. What are some ways of improving capital formation?
Well, it's a very large question, you can imagine, Henry, but I'll share a couple of thoughts with you around it. So first of all, I think that we have, as Ian said earlier, a great history and a great historical success story around mining in Canada, and we're missing successes today. Why is that? I'll give you one thought. I think that the quality of many of the mining companies has been deteriorating, and I think that exchanges have played a role in there. And when I talk about quality deteriorating, that is the criteria that you need to follow to go public on venture exchanges, in my eyes, are not sufficient. And if we could bring that up, we bring that up more to a level of senior exchanges, I think that will inspire more investor confidence. There is a reason why companies listed on venture exchanges don't see their stocks being marginable. There's a reason why they're not included in global benchmarks. And by the way, a global benchmark can add quite some investment and capital into a company. So I think that is a first element that I would talk about. The second one that I see is I believe that exchanges have a bit lost their mojo. I think that when they became for public companies, this is a global phenomenon, but it also applies, of course, in Canada. They started to focus much more on how do I maximize shareholder value than how do I maximize the service to my core constituents, capital raisers and investors. And I think an exchange can play a very, very important role in helping companies to understand liquidity, to help them with investor awareness, to help them in maximizing access to trading and to data. And why is this very important? Well, think about when you do your initial raise and you go public, you're going to need more. It's not going to stop with one raise. You're going to do a secondary one, and if your stock is not liquid, it's going to lead. We heard that point earlier, to capital dilution. A stock that is liquid, a stock that is doing well, will also be able much more rapidly to start benefiting from dual listings in other places in the world, get access to more capital. The third point, which for me is very important, that is, we have to tackle some of the behaviors that are tarnishing our capital markets. And I'll give you 3 that bother me a lot. Pump and dump, predatory short selling, naked short selling. These are 3 phenomena that are still omnipresent in our market, and don't help us. Doesn't help investor confidence locally, but doesn't help investor confidence internationally. When I talk with some of the large investors in Europe or in the US, they are aware of this. We have to tackle this. We have to address this because it's bad for the company, it's bad for the investor, it's bad for the shareholder. And then the last thought that I will leave with you, and that's a bit a consequence of something important that is happening with us, that is, find new ways to tap into global capital pools. There are global capital pools out there that we are not tapping into, and I think that what we are doing today, and Henry, I'm sure you read about that, with the acquisition of NEO by the SIBO Group, which is a 14 billion global exchange group based in the US. With them, we're going to look at new ways on how we can really provide issuers, capital raisers, and that, of course, is going to look at the ones in Canada with access to investors in the other parts of the world, leveraging a series of assets that they have, in fact, globally, Asia Pacific, Europe, North America, and I'm sure more to come. Those are a couple of thoughts I would leave with you.
Certainly, yeah. All right, well, so drilling down a little further into NEO's offering, I'd like to ask the same question in different ways to both of you. So firstly, Josh, please talk us through how NEO's offerings set it apart from the competition. You know, why would a mining company going public today choose NEO over the TSS? And then for Ian, why did you decide to join the board of NEO? You know, why is this an important role for you to play today? Let's start with Josh and then we'll get to Ian.
Yeah, couple of reactions. I think the first element, probably, this is going to sound a little bit like motherhood and apple pie, but it is very true. We decided when we launched NEO, the vision was to come with a different exchange, an exchange that would do things in a different way. And in everything we do, putting investors and capital raisers first. And that translated itself in you know, how we build our trading model, which is very focused on tackling, you know, certain types of trading behaviors that we don't want to see in our market. That translated itself in all the support we give to issuers. Like, we are the only exchange here in Canada, and I would probably say globally, that is keeping itself an eye on you know, what's happening in the markets. And when we see a trading behavior that we think is suspicious, that could be potentially predatory short selling, guess what? We report it immediately to the regulators. And we think that that is part of the things we should do. Inform them and tell them something is happening here, and we don't think it is right. And it translates itself in service. You know, talk with our issuers, talk with the organizations that they work with, their service providers, how it is to list on NEO. We apply our requirements as a senior exchange, but we are there to find solutions, not to find problems when companies want to go public. I think many of those elements are the elements that make us different. And I often say, you know, and now it's easy to say, of course, but at the beginning, we're making a big bet here. Can we, as an exchange, be successful if we do what is right? The reality, Henry, and I can say that with confidence now, the answer is yes. So we are over 100 listings. I think probably 50 now are corporate listings, very focused on the innovation economy, which is another differentiator. We put a lot of focus on the innovation economy, including critical metals. But I think those elements make us different. And we're a bit of a disruptor. We're a bit of an exchange that does things in a different way. We say things that people sometimes don't like to hear, but you know what? I think it's all in the better interest of our companies and our investors.
All right, and over to you, Ian.
Well, the reason I was interested in what Josh and his team were doing were just the reasons he enunciated there. The disruptor aspect of it really appealed to me. You know, I've been involved with listed companies in Canada and Australia and Great Britain, etc., for 30 or 40 years. And there's always frustrations at the listing level with dealing with the regulators. And although you always get there in the end, it's a challenge. And listening to Josh and his team talk about how they were going to do things differently, how they were going to work so hard for their clients that list with them, that really appealed to me. And also I wanted to get involved in opening up NEO Exchange to the resource industry, which is where my experience and contacts are. So the combination of helping NEO grow, but also getting involved with a disruptor. And I think, as we've all seen in all kinds of industries, a disruptor coming into an industry makes everybody better. And I'm sure that's the big role NEO will play in listings in Canada.
All right, well, segueing into that, Ian, what do financing alternatives look like today? Or in other words, what does it mean to be innovative in capital raising? And as a second part to that question, who is funding mineral explorers and developers today? Has the investor base changed at all in recent years?
Well, as I mentioned earlier, the best investor base for grassroots exploration is retail investors. They get the most excited, and they certainly provide a pool of capital. And that has been missing recently. as I say, because of the lack of success, there's no buzz about somebody making a major discovery, especially in gold in Canada or as a Canadian gold mining company. And so that is, I think, where the problem lies. As far as innovative ways to finance, with the internet, my view is most people know where the money is. And as Josh says, we can help them access capital they haven't accessed in the past, but there aren't a lot of secrets out there. There isn't a pool of capital somewhere that some CEO in Canada is not aware of and isn't trying to access. So I think the market's changed in that it's more institutional and less retail, and institutions are harder to get excited, especially in the resource sector, than retail investors are.
Right. Yeah. All right. So let's switch gears a little bit. With the global energy transition accelerating across the globe, how can the NEO exchange help explorers and developers form the new critical mineral supply chains required in North America? This at a time when a wall of demand is expected to approach from the electric vehicle revolution, among other new technologies, and viewed against too few new projects getting off the ground to fill the gaps. Josh, I'll throw that to you.
Yeah, I think it takes you a little bit back to the basic principles of why we are there. I think you know that demand is there. You're absolutely right. It's growing, and I think what we need to do here in Canada is to help them, make it easy for them to go public and to get access to capital, but at the same time balance that with building an image of quality. I think those are always the two elements. You know, when I look at NEO, that we are focusing on, how do we ensure that the companies are of good quality, that they do the right things to be successful when they go public, and at the same time, how do we help them to give them an easy experience? Like recently, and this is a good example, the company Canadian Manganese listed on NEO. Manganese, as I'm sure you know, it's a critical mineral that is mainly produced, if my memory is correct, in China, and this is going to be one of the first initiatives that you really see in North America, which is great. And a company like that is representing tremendous potential, you know, for Canada, for the economy. And I think we spend time with them, helping them to see how they can go public in an easy way. And I think that that combined with quality will attract more investors, bring more investors back into these types of resource investments into Canada. Quality, making it easy, and I think we need to rebuild an image of you know, the place where you should be, because here is where you're going to see successes, and we're going to see some successes in those critical minerals. I've got no doubts about it, because that demand is so big, and we need to build some successes, become again that pool or that country, that place where you come when you want to list, where you want to come when you want to invest. And what is going to be very important in that is also to build the right image around it, the right brand. One of the things we spent time on and that has been working is building an image of the exchange of the innovation economy, and people start to associate that with us. And when you think innovation economy, you don't only think, you know, biotech, fintech, and all those kinds of things. You think, and you mentioned it, for example, electronic vehicles. You're going to see one coming on NEO, a very interesting one, very, very soon in that space. But you also think about critical minerals, because they are the components that make that possible. Another area we spend a lot of time on, which is tied to this entire energy transition, is carbon credits. Carbon credit is a very important element that is developing, and I think something that people don't necessarily always understand, and can be very interesting for companies to understand that, because there's an opportunity there to generate carbon credits, generate potentially additional revenue. It's maybe something you need to help you to comply with some of the targets that governments are imposing. And that entire carbon space is coming to NEO. It's not going to the TSX, it's coming to NEO. Why? Because people start to see us as that exchange of the innovation economy, the exchange where you go with all these kinds of initiatives and activities, including critical mineral resources.
Mm-hmm. And if I might just observe from my side, I think a critical part of this transition is also the continuing education of the public of mining's role in this transition, right? And that's part of the good work you're doing.
Henry, I think you hit the nail on the head. Education is critical also, and earlier today I had a discussion with a company in the carbon credit space, and it is still fascinating based on the discussions that they have with investors, even though there's a lot of capital coming into that space. But as soon as you go into the non-institutional capital, which as Ian said, comes with some of its challenges also, but as soon as you get there, there's still a lot of lack of understanding about what is it, how do those products work. And it's the same with the critical mineral space. Why is it critical minerals? Like, why are we talking about that? What makes it different from other minerals? And I think we need to explain, we need to educate, and I think it will be very, very beneficial for those investors. It will attract more investors, and it will be great for the companies.
All right. Okay, so one more question for you, Josh. What kind of new regulations or rules are required to ensure the continued success of these critical mineral companies, and perhaps also to better prevent bubbles from forming, such as what we've recently seen, in the not too distant past with the cannabis sector?
Yeah, you do come with very interesting questions, Henry, and I got to say sometimes I wish we had a magic wand and that we could change some things very rapidly, but everything takes time. Like bubbles, they emerge when there's excitement. We've seen bubbles in the cannabis space. We've seen bubbles in the psychedelic space. We've seen bubbles in the digital asset space. And what I believe is that bubbles happen, will always happen. Education is very critical, but also critical, again, quality of the companies. Because the good companies, even if you acquire them in a bubble, they will continue. The problem is all those companies that should never have gone public. Like I can tell you that I see that in every emerging sector. When an emerging sector appears, you see the good companies coming in, and then suddenly you see a series of companies that should not exist. I think that needs to be better addressed. And one of the elements that where I think the regulators should step in, that is to act much more aggressively on improper promotion. And I think they should also act on some of the short selling elements. But I'll come back to that afterwards. I will not say that venture exchanges are bad. I think they play their role. They have played a much bigger role for me in the past. I think that there's a quality issue that has emerged on them, and regulators should pay attention to that and make sure that we have a minimum of quality that is there. I think that is important because all of that drives investor confidence, and investor confidence is critical for a sector to develop. The last point I would say about the regulators, where I would like to see them stepping in, I would like to see also stronger prosecution in predatory short selling activity. I want to see a ban on naked short selling, and as I said before, things that we're pushing for very hard. But it's all about building confidence and making sure that the quality is there. Those are the two words that I will always repeat: quality and building confidence. And then from an exchange perspective, add to that the word service.
All right. Okay, so let's take a question from the audience. Anonymous is saying quality has been mentioned several times during this discussion, but not much has been said what the quality would look like. Somebody's asking, why not set up thresholds for quality achievements to remain listed, and go even further, have a star rating system so that retail or investing public can differentiate the quality denominator. Any thoughts on that?
I'm happy to start, Ian, because it is obviously something that we look at. I think, you know, quality for me, where it starts is at the top of the house, and that is with governance. And I think that Ian made the point about governance also. I think you need to have the proper governance in place. And when you look at Canadian security legislation, and you can do it as a venture or a non-venture company, but you will see criteria that you need to comply with if you want to move from a venture status to a senior status. But what it brings is full governance for the organization, the right committees, the role of independence. Independence, I think, very important. Those are elements that I see. The second element that you find in securities legislation is the importance of audited financial controls. I think that is very important. That builds confidence. Quality of the reporting, I think that is important. That's an important element. Then you get into some other types of criteria. That is, you know, how large must a company be? I don't think a company must be, $200 million to go public, but I think it needs to have a minimum amount of shareholder equity, or it needs to have a minimal size to give it a future to execute upon its vision and its strategy and its plan. So those are a couple of examples, and I can probably give you many more. The one that is very funny, and this will surprise many over here, we're the only exchange that is putting a requirement in place to allocate a budget to investor outreach. That is important for a company to have, and not to do promote, but if you don't reach out to investors, you have an issue. So, couple of thoughts.
Yeah. Thank you very much for that. Do we have time for one more question? Yeah. All right. So I'll close with this one. We can put a bow on it. So several of NEO's clients tended to graduate in the past to global exchanges like the NASDAQ and the New York Stock Exchange. How does NEO provide these companies with the required leg up? And what does it say about doing business with NEO in general? I'll leave it open to any one of you.
Go ahead, Josh.
Yeah, I was going to say that one is probably more in my realm, having gone through some of those scenarios. But I think it just gives you a clarity and a statement about what we do and the quality of what we do. So we have companies that come over here on NEO that grow within the Canadian context, that are going to leverage some international capital and investors, and we take them to a level of liquidity, a level of awareness, where then they're ready to make that next step, and that next step is not the TSX. That next step is immediately NYSE or NASDAQ, and I think that it speaks to the quality of the companies that come here and all the service that we put around it. Now, what I can tell you, because you're going to say, well, what it's a bit sad that NEO cannot benefit more from that next graduation. Like, the companies stay with us because they still want to benefit, of course, from and service their Canadian investors and shareholders. But that is where we are looking at a very aggressive and new plan with SIBO, and I think there's an opportunity to build a new global competitor that is going to compete directly with the likes of NYSE and NASDAQ, and that is the vision that we see in that partnership.
Henry, Ian, Josh, we're going to have to leave it there.
All right.
I always need to interrupt a fascinating conversation, which this was. We do have a number of audience members that are inquiring about wanting to list on NEO, Josh, and they're asking how best to do that. Should they get in touch directly with you? I imagine if they go to NEO's website, the information would be there. What's the easiest way for them to pursue that?
Well, you got two options. You go to the website, or you send me a quick email, and we'll get that going. And the email is easy. It's my first name, Joss, and at neostockexchange.com in one word. Okay.
Excellent. Excellent, wide-ranging conversation, gentlemen. We really appreciate your time. Thank you for joining us, Joss and Ian. Thank you for the always great job, Henry, in guiding the conversation. Cheers,
Thank you, gentlemen. It was
Thank
a pleasure.
Thank you.